Yes, we are live. Welcome, friends. It is Wednesday, 11 a.m. on the East Coast. Yesterday, I had put out a video that may have been contrary, at least at the moment, to our Pattern-cast macro signal, but I believe the macro signal is turning around to reflect what is happening. The market is on fire because of expectations. High expectations, extremely high, very, very high expectations. But when you're so down low, it's easy to have those high expectations. We know where we were. You know that the Nasdaq is within 90 points of being at all-time highs. Now the Dow and the S&P, they're lagging behind a bit. But that is just astounding, especially in the face of all the disaster, calamity, strife that we've been put through. That just go now, and a lot of people would want you to believe, and to a degree, I subscribe to this notion that the Fed had a lot to do with it, and they are doing whatever they can to pump this economy up. You know, give it at least a base. But today's numbers had nothing to do with the Fed. Today's economic reports had nothing to do with the Fed. They are raw numbers. And while they aren't what I would consider good, what they are is much better than expected as we start turning this corner, getting back to work, ending the lockdown. In terms of manufacturing, in terms of employment, in terms of energy usage, all of these things are showing that there is something way ahead of the curve, way ahead of expectations, way ahead of what is being reported in the media. These are raw numbers that are showing that the beast is awakening. You cannot hold it down. You cannot keep it back. There is nothing that will hold us down. There is nothing that will defeat what we are destined to, and that is greatness. Yes, I am optimistic. I am extremely optimistic. Everything that the media, I mean, there is definitely collusion here. There's the media, there's the leftists in the Democrat Party. There is the insurrection or domestic terrorists that are doing everything in their power to bring this economy down. We have spent the last 3.5 years of nothing but scandal, made up scandal. Now, is coronavirus made up? No, it's a real thing. It afflicts certain demographic viciously. And of course, there are those statistical outliers that get it too that are younger. But generally, it affects older people or people who already are compromised with their health, their immunological systems compromised, breathing issues, anything like that, obesity. These people are vulnerable, and they deserve our protection. But everybody else can shed this off. We approached the lockdown way, way, way too aggressively. Right after it was apparent that we were all going to get back to work, out of nowhere comes this racial incident. Just when, people's ire and their patience is wearing thin from the lockdown, the George Floyd thing happens, which was absolutely abhorrent. Unfortunately, now rightfully so, people went out to protest. Unfortunately, those leftists were not going to let such a calamity, crisis, a poignant moment to go to waste. There were the protesters that came out, and then you had the indigents, the thugs, along with these domestic terrorists known as Antifa, join them, mix in with them, and turn it into a sham. Doing anything, and their goal was not to protest. Their goal was insurrection. And so they attempted it. And to some degree, they're still out there. But even that did not phase the market. The market is still going up. Because the American people realize that this is the truth, even though the media won't report it. These are fake riots. Well, the riots themselves, the insurrection is real, but it is not because of the racial incident. It is because they want America to die. They want you to die. They want this government to die. At least part of that insurrection. The other part, they could give a shit one way or the other. They just like free stuff while the getting's good. I saw one report. I don't know if you knew this, but in many of the cities, bricks and stones were shipped in and then placed on pallets or in cages for easy access on the sidewalks in front of stores for these Antifa thugs to pick up and throw through windows. This actually happened all across the country. It was coordinated. Why isn't that reported? But I saw a tweet saying that, well, someone must know who actually brought this in. What gravel company, what masonry company, or companies were responsible for delivering this stuff? Okay, maybe it was just a job. And they needed the work. So they would deliver these pavers and other things and put it on the sidewalk prior to these protests. As if. But I heard that, and this is unconfirmed. I don't like to say things that I do not actually know, but I heard that the companies that delivered these things were owned by Halliburton, which is, of course, a Buffett company. Should there be a connection there? I don't think so. Is it even true? I don't know. Just weird. Really weird. Super weird. So, Nathan E., interesting. So you equate the markets to the real economy or Main Street. And so you don't. The the markets, as I've said before, are a future discounting mechanism. They establish a price somewhere off into the future, 3, 6 months, whatever it happens to be, whatever the prevailing sentiment believes, where they believe the true value of the country is in the future. Now, of course, that true value is affected by things that are happening today. And the market can either believe or not believe the events, project out where it thinks things might be going, whether or not there's going to be a turnaround. It is not a direct reflection of the state of the economy today. It is the reflection of the forward outlook of the economy. So yeah, they are tied 100%. Rawa says, if you're correct on this, Bernie. Well, the one thing I am correct on is knowing that my name is Ernie, but thank you. I'll subscribe to Asymmetric Advisor. That's cool. We would love to have you as a member. It's a fantastic service. We talk about natural resource investing. We've made a lot of great picks, and this weekend we're going to be going over our watch list. The companies that we want to pick up to be in our portfolio. Not as a speculation, but as an investment. And there will also be some speculative plays there as well. So if you'd like to join today, go down below, click the link, join today. You get a year membership and monthly reports and daily commentary. Wendell, thanks me for telling the truth. It's the truth as far as I know and as far as I can assess. Chris says, this all getting beyond on the realm of weird. And yes, truth seems, in this case, to be much stranger than fiction. I challenge people to go out there and actually, in retrospect, come up with a plot. Just launch yourself back in time and then, go start looking at the reports on Google. You can do that by just changing the date. And then implant in your mind the actual present day happenings. And then, imagine yourself there projecting that this would be the eventual outcome. It would seem just totally unreal. Nathan's so cliche. He says, I guess we'll see what the future holds. Of course we will. We have no way to stop the future from happening. We will see what the future holds. That is a guarantee. And Adam says, you don't think all this money printing will lead to more poverty and hyperinflation? What does money printing have to do with poverty? To an extent, the money printing has to do with some of the income inequality. But the rich getting richer does not necessarily mean the poor get poorer. It tends to lift everybody, but it definitely tends to lift the rich much more quickly. The money printing is really all about creating liquidity so that you can commence in commerce, and also to shore up the banks and to line the pockets of fat cat bankers, of course. And unfortunately, that is their methodology of trying to grease the skids and help out everybody. And it works to some extent. Will it create hyperinflation? Not at this moment. And the reason why it won't is that we are in severe deflation. We have deflationary events happening now. We are in a giant sucking vacuum hole of deflation. And all this money is getting sucked up like that. They took $6 trillion and they dispersed it out in relief. Where did it go? Just sucked up. Gone. They could just keep on doing that printing and distribution of money, and it would get sucked up until we fill that void, get back to work, get the gears of the machine turning, and start creating some inflation. Hyperinflation? No, we're a long ways off from hyperinflation. A long ways off. What we need now is growth. We need to get back. We need to rebuild. We need to pull in our global supply chains at least as much as we possibly can. Keeping those supply chains, those swap fund nations healthy. Those are the nations that we deal with directly and maintain liquidity between our banks so that we can do commerce with them. Our favored nations. Take the unfavored nations and say, pony up, or you ain't playing with us. That includes China. Yes, China is unfavored. We all know why. Because they're rat bastard communists. And they only have one goal in mind, and that is their elevation on the world stage, which means our destruction, and that's what they're after. That's what they want. We ain't giving it to them. So we need to pull back those global supply chains. When we talk of globalists, who do you think that we're talking about? When you look out into the world, the globalist. Besides, here, there are some people here that feel like they're part of this global community, that we can't live without everybody else. So much so that we must become subservient to everybody else in some people's minds. Who are the globalists? Largely. They are the communists. China. Like, duh. The commies are here too in the Republican and Democrat Party. That is true. Well, I would call them severe leftists, misguided leftists. And some of them are devout communists in every way, or at least part of the tyrannical left. They are the tyrannical police state, nail your head to the wall, do what I say because I know better for you, left. And they have taken over the Democrat Party. Well, they've been taking over it for a long time, but now they thought that they had some kind of edge, but they fail at every turn because they're incompetent. And look at that market go! Let's check this out. To the charts. Now, I drew this E here in advance, at least a week ago, maybe a little bit more. And I had two scenarios, ABE and ABCDF. All right. I was betting on ABE, and it looks like that's exactly what we're going to be getting. ABE. We've already broken out above significant resistance. We've filled the gap. What gap am I talking about? Not that I really believe in filling gaps as a thing. I mean, it happens for sure. But, to assign some sort of credibility to it that, filling the gap does something. It's just bullshit. It's all bullshit. All right, we're right at the precipice here. Once we clear, if we clear this mound here, it is off to the races. And I suspect that we do, considering that the NASDAQ is already well above there. Let's take a look at the SPX index. So also in the SPX, we need to get above this. What is this line that I have drawn here? That looks like a POC from another. Yeah, it's a POC. This was a very high, an area of high volume. And that's the POC of the last move up. We're right there. We are right there. Of course, these are the gaps that I'm talking about. We've just totally blown out through these gaps and broke out of this triple top that a lot of people were talking about. Now, from a volume profile point of view, let's add some more data in here. So you can see that we've broken out of this huge, massive node. We came up above it, came back down and retested it right there, right in that area. Can you see that right there? That volume node, super strong, developed way back here in 2019. We broke through it, came back down and retested it. And let's see, I'll put a line there. This is really important. So that's like right on the edge of the node. Right? So now when I zoom in, you may not be able to see the node, but you'll be able to see where the edge is. And just zooming in some more so you can see that very clearly. All right, so we broke through, we came back down, tested it, established it as support, and then moved up. Now we're breaking out into, or break on through to the other side. We're breaking on through to the other side. Now, before I get back to the big head, watch this. You must like this video, leave a comment, and subscribe, and hit that notification bell. Thank you very much. We are breaking on through to the other side. Let's go to the Dow. Dow futures. I'll show you this in a second. Hold on. Well, actually, I had the same kind of prediction on the Dow, it looks like. Hold on a sec. I was predicting some churn, which we got. A little churn. Now, I thought that we would go down one more time before going up. So that was a little premature. I guess we went down a little bit, but not as far down as I thought. I thought we had the potential to go down here, then go up. So this is the Dow Industrials. And we'll just bring in more data here. All right. Now, I drew this this box, these yellow boxes, showing various nodes. And they're probably from previous data. Let's see if we can bring some of that in. Yeah. All right. So this is important. There's this big node right here that's represented by this yellow box. And we've just entered into it. The market finds tremendous value right there. If we can get above that, you see this gap here, then we'll move up to the next node. I don't see any problem with not getting up to that next node. I mean, we're already entered into this one, high value area, goes all the way back here in 2019. And it's only a couple of ticks away from moving up through this gap. When we get up into this gap here, this volume well, if we do enter it, then we should be able to move up into this next area of value, this next node. And then we'll probably hang out there for a little bit. And then depending on how things go over the coming weeks, we'll probably launch off from there to new highs. So like this video, leave a comment, and subscribe. Thank you. Uh, 3220s looks like a good rejection spot. Probably referring to the S&P. Let's go back to the S&P, see what the hell he's talking about. We'll look at the ES as opposed to the S&P. Well, 3200, yeah, is right in the middle of that volume well. But as you see, I have my arrow, my up arrow, showing that as my ultimate target. So you're very perceptive there. And but I think that we're going to make it up there. I think we're destined to get up to 3200. And if we make it up that far through that volume well, I'll see no problem with joining these other sort of this trident of, that's a new term. It's a trident value node. Rawa says, do you think that the government will help out the smaller shale oil companies that are currently facing bankruptcy? If they feel, well, first of all, most of them are in Canada, so probably not them. But the ones that are here, if it is in our national interest, if the Trump administration determines that it is within our national interest to keep them up and running, to keep ourselves energy independent, then yes, they will. I'm not so sure that they're going to come out with a sort of a sweeping plan. They're coming out with more of a sweeping plan for all industry. But to target just the shale oil companies, probably not, unless only if it is vital to our national security. Adam says that apparently this 3220 is also the swing low that brought us to the all-time highs. Yeah. And so I agree that area, the 3220 area, is probably an important area. As a matter of fact, you can see it's also the POC of all this, what you're talking about. All of this move up to the all-time highs. All right, so I have one more announcement, and that is that this week, or this weekend, I'm holding a webinar for the Asymmetric Advisor. You can become a member of it. We do natural resource investing, gold, mining, junior miners, exploration, oil, pipelines. We also invest in, or we're investing in cannabis-related companies. I think that hemp, from an industrial point of view, is going to be huge, huge. Lesser so on the recreational and medicinal side, maybe a little bit more on the medicinal. But I think that a lot of people are overlooking the industrial implications of hemp farming from from a wide variety of industry. I mean, it's amazing. And also we're looking at video gaming. Video gaming is huge, and all the ancillary businesses that are around it. Did you know that video gaming is bigger? Its market size is bigger than Hollywood and the NFL combined. That is unreal. And it's a huge opportunity that we're looking at. Anyways, that's what the Asymmetric Advisor is about. We are looking for asymmetric opportunities. Small risk, huge return. And we'll sit like ninjas waiting for those opportunities and then pounce on them and attack them. Knife them to death until they're ours. So anyways, consider joining the Asymmetric Advisor. It's super inexpensive, but huge value. Huge value. I guarantee that if you whatever you spend on that year subscription, which is very small, you will at least triple it in the coming year, minimum, with just a small investment. Well, you would have done that already with the picks that we've had in the past 2 months. If you had invested under $500, you would have easily paid for almost 2 years of a subscription. That's crazy. So please sign up for the Asymmetric Advisor. We're having a webinar. I'm only taking 10 people in this induction ceremony. 10 people. I only take 10 people at a time. Only 10 spots left. All right. Now that that's over, thoughts on BTC? Oh my God! Everybody was. Well, let's go to the charts. Just a second. BTC USD is a cryptocurrency. So if you know my feeling about globalism in China, then you probably know my feeling about Bitcoin. But of course, there's a lot more to Bitcoin than just globalism and magic money. Of course, we had this kind of fake breakout just recently, and now it's turned into kind of a tweezers pattern. And overall, I don't know what to make of Bitcoin. Well, I do know what to make of it. It is a mechanism that is being severely manipulated by a few small, very concentrated groups, the miners, the whales, and some nation states, particularly China. So has PatternCast been renamed to Asymmetric Advisor? No, they're two completely separate things. Asymmetric Advisor is a natural resource investment advisory. But in terms of technical analysis for this right now, where we are right now, sitting near 1-year highs, anything can happen. But see, from my point of view, I don't believe that they want to bring it above 10,000 right now. Not in their interest. They're not going to be able to attract enough people. There's a lot of churn that needs to go on. I think they're going to look at one more dip and see if they can entice people to come in and then run it up. Some may claim that, well, maybe that's what this attempt was, this dip here, but it failed. They could not attract the people to get into Bitcoin this time around over the past, over the past year. Well, not past year, past 6 months. Since the beginning of this year. So in February, we took this big dip, and then we've moved up ever since throughout the pandemic. I guess the idea was that, hey, maybe we'll try pushing Bitcoin up through this pandemic, and make the case that you need magic money while everyone's out of work. So even while they had the full attention of everybody sitting at home, they still couldn't get enough people in there to, to purchase Bitcoin. All right. So let's go to those charts. So this is Bitcoin over the past, as I said, 4 or 5 months. February, it came down hard. Nobody knows why. Lots of stories out there, but nobody knows why, but I do. It is pure manipulation. Actually, I do know why. I mean, the reason is the same reason why gold went down. The investors in Bitcoin wanted cash so that they could take that worthless fiat and invest it in markets that were super low. That's why it went down. That's why Bitcoin went down. Since then, it's been pushed up with the hopes that they could then attract more people, and it failed. More people did not come into Bitcoin. More accumulation at lows around 7,500. I don't see the accumulation. I'm sorry. I look at that, that volume as being, I mean, there was more accumulation up in the 8 or 9,000 area than 7,500 for sure. But I looked at this as just super light action on this move up. I mean, you can see that in the volume profile, just super light action. Very light action. This is not accumulation. This is artificially pumping it up when you have that kind of light action and then this big airspace here. And then they tried to push it up above these resistance levels, and it was soundly rejected. Simply not ready. No, I see from 7 to 5K. I do. And I see nothing. I mean, if you compare this, if I brought in a lot more data, it may not be apparent right here. But if we bring in a lot more data, you'll see that most of the action actually happened on this previous attempt up, and then this consolidation here in late 2019. But here, the relative volume that happened between March and today compared to what happened in the previous year is nothing. This push up has been complete air. It's distribution at the top of the range, clearly. Well, yeah, of course. See, they pushed it down. They took all that money. They put it into the market. They made a shitload. They bought some more Bitcoin with that with those profits, and then they pushed it up, and they're selling it again. Clearly, there's nothing clear about Bitcoin. Nothing. But anyways, I don't even know why I spend the time on this. I mean, we have a service. We don't even sell subscriptions to it anymore. It's been now every year, they say, well, it's only been, let's see, at first it was, oh, it's only been 9 years. Oh, it's only been 10 years. Oh, it's only been 11 years. And then next year it'll be, oh, it's only been 12 years. Give it some time. I have no, look, come back when it has made, some significant gains and it is starting to be used in regular commerce and things, or whatever the hell it's going to be used for. Until then, it's just not interesting anymore. I suppose it's interesting to trade only because you get this kind of volatility. But even that, you can't really rely. You have no idea or when a whale is going to come in at their whim and do something. But to think that this is going to replace any monetary system, Ernie, how much minimum capital to trade the micros? Micro futures. Well, micro futures are 1/10 the size of regular futures. So the margin requirements are exactly 1/10. So the S&P, if the S&P has a margin requirement on it of $5,000, then on a micro, it's 1/10 of that, or $500. And, and to say how much you need to trade it, it depends on what you're trading. 10, 20K. I mean, you can, with 10 or 20K, you can do the minis. With the micros, you could trade under 5K easily and still, remain relatively safe. It depends on how many positions and asset types that you want to trade. But it's basically 1/10 that of the regular futures. So just look at it that way. 1/10. The real difference, though, is that even though it's 1/10, the commissions haven't changed any. So the commissions are about the same. The commissions aren't 1/10. So it ends up costing you 10 times more for commissions on a relative basis, which doesn't seem fair. But that's what it is. It does allow some people with smaller accounts to get in there and play the game. All right, let's move on to a better topic like gold. Gold just can't break above this neckline. That 1700 to 1800 area is a no-go zone. I believe gold is going to come back down and probably find support in the 1540 to 1440 area. I think it's going to fulfill my scenario 2 projection, where we're going to come down here, do some more churn, and then move up at some point in the future. But gold will ultimately, at least in the next coming couple of years, will ultimately maintain relative value with the markets. There'll be a slight lag while we go through this inflationary period. We need to reinflate the economy. That's why I'm showing this move down in gold. And then as the economy really picks up, it'll start maintaining its relative value to the economy. And that's what this next leg up is. So that's what I see for gold in the coming months. Damien says, the Fed is printing money. This rally is so fake. I don't know who you're listening to, but the rally isn't fake. But the Fed is printing money, and they are pumping money into it, for sure. They are creating liquidity. But the rally is real. The economic reports are real. And yeah, sure. And do I have a problem with that? No, I don't have a problem with the Fed printing money. And whether it's fake or not, it is having a material effect, psychological and monetary effect on our economy. It is keeping a lot of people solvent in their 401ks. So from that point of view, I think it's good. It's also attracting foreign money. People are buying into our markets. So whether the Fed's helping us out or not, I think it's a positive thing, at least for now. It doesn't seem like it should be that way. I mean, from a Austrian economic point of view, and I don't want things to be that way, but and I hate to use the cliche, it is what it is. Just accept it. accept it, move on. All right. If we sit here and just yell at the computer screen and say it's fake, it's not real. Well, the money is real. I mean, you can withdraw that money and put it in your pocket. It's real. Well, okay. So Adam says the market is never wrong. I've said that before. I think a better way to say it is that the market is the truth. In other words, the market is the representation of where we are right now. Wherever it is, that's where we are. You can't, it's not like you can change it. You can yell at it. You can say, you shouldn't be there. It's all fake. But like I said, you can withdraw your money out of the market. All that money is real. It's real money. You can use it. Like the video. Write a comment. Hit the like button. Smash that like button. And subscribe. Thank you. Cedric says, that's so fucking true. Media can lie, politicians can lie, but the charts never lie. It's the only truth in the world full of lies. Yeah. So now all-time highs? Yeah, absolutely. But it's going to take a little work. I think that we're going to go through some learning and some growing pains here as we get people back to work. We're going to have to figure out how to solve some big problems. We have to deal with these domestic terrorists. We have an election coming up that we have to get over. So, yeah, there's a lot that we have to do. We need to figure out what this new normal is, too, with this pandemic. And how much of it is fake and how much of it is real, and just what is the actual risk. Because I don't think anybody has a clear idea of that. I think what we do realize is that the risk isn't as high as the media is portraying it. Because the media is out for one thing, and that is to destroy us, or destroy this country, or destroy the current political leadership. Well, that's a telling sign, Adam, saying that it's strange how the negative economic data isn't influencing the market, but the positive does. But it's also, you have to look at what that economic data is. There were some things that came out today, for instance, and I'll refer to it in. Let me just tell you what I'm talking about. So some of the things that came out today. The ADP employment report. They had expected there in the month of May to be 9 million more people out of work. And it turns out only 2.76 million were in the month of May out of work, or went out of work. Now, while 2.76 is unbelievably bad, it's not 9 million. It's not 9 million. The other thing is that they revised down the number of people that were out of work in April from 20.2 million down to 19.5 million. You might say, well, that's only 700,000 out of 20 million. But it's still 700,000. You add that 700,000 onto the other mistake of 6 million they made on May, and now you're talking about 7 million fewer people are unemployed than we expected. That's a lot of people in any market. So of the total, where people thought that there was 30 or 35 million, approximately a quarter of those, a quarter of that number was over expectations. So it's not as bad as we thought. Still unbelievably bad. It's not as bad as we thought. So the other things that came out was the Chicago PMI. That's the Purchasing Managers Index. And it was much better than expected. Still bad, still super low, still way under 50, which is a contracting number, a severely contracting number in the high 30s, but still way better than they thought. And then, of course, we had the ISM that came out, which is the Institute for Supply Management. And that also came out more positive, better than expected. So that was like the almost the trifecta of things, that things were just better than expected. Unemployment was better than expected. Manufacturing was better than expected. And then right after that, we had the EIA report, which is the Petroleum Status Report. And typically the petroleum status, what it's telling us is how much petroleum we actually have in our reserves. And when there's a drawdown, that is indicative of an economy that is using that energy to spur, economic stuff, right? So if there's less energy in the reserves, that means that than they expect. That means that we're indirectly, that means that people are driving more and they're powering plants more. They're just using more energy, and more energy is more good. And so that also happened. There was something like 7 million barrels less than they expected. So whatever that comes out to in terms of energy and stuff, that is going into the economy, that is churning. So all of those things are the reasons that fueled the market moving up. And is it still going up? At this moment, we are up in the S&P. We are up 1.23%. Not bad. Yeah, housing is expensive, but I already live in a house, so I don't care. Those prices will come down, I'm sure. A lot of people are on this kind of self-imposed furlough, and they aren't actually paying, and they're going to get forgiven. I hope that the creditors will see the people like me who have been paying their mortgage in a different light than those people that didn't pay their mortgage. So Cedric says he has a good job, but even with that good job, can only buy a small apartment. There are still deals here in the States. I mean, you can buy a house, a home, fairly cheaply and make a good wage and easily pay for that house. Depends on where you live. Now, where I live, that's not true. I live in an affluent neighborhood in a rich town, and the taxes are super high. So you have to make way more. You have to make way more than the average person just to get by. So it really depends where you are. But you go, south of here just by 10, 15 minutes, and you can get a house that is, of equal size, quality, in a nice neighborhood for half of what I pay or less. Justin says to Cedric, "Whoa, bro, I'm sorry, most of us are economic slaves by design." Well, sure, if you choose, the corporate job and the corporate position, and even though you feel like relative to other people, it's a halfway decent job, and that's all you ever aspire to, then yeah, you're going to fit in right in with the rest of the working slobs and masses, and that's where you'll be. Now, you can step it up a notch by doing some side hustles and make some extra money and improve your situation. Maybe buy your own rental income property and rent it out and start becoming a landlord and making extra income, or a business. That's how you get ahead. You don't get ahead by just being a corporate slob, working a fairly well-paying job and then saying that should supply all my needs and comforts and give me the type of lifestyle that I aspire to. It won't happen. Well, Damien, don't say that stocks will never crash again. They will crash again. There's no doubt. There is no doubt there will be another crash, but I don't think anytime soon. I think that once we get beyond this pandemic and this insurrection by these leftist anarchists, and people get back to work, we're going to recover very quickly, and we're going to continue recovering because we have a long ways to go to get out of this. And the market will keep on going up. We will hit new highs. Nicholas is asking, the next volume node for the S&P 500 around 3,200? Yes. And there's a big volume well between there. And I believe that, like I said, once we get through this summer, we're going to travel through that volume well very quickly up to that 3,200 area. And then once we're there, that's an area of value that we can sink our teeth into, so to speak. The average person is 1,700 euro. I earn 3,000 euro. A small new apartment is like 250. If you go to the bank to get 250,000. If you go to the bank and get 200,000 euro, you pay $1,000 a month to the bank for the next 25 years. But that's the situation everywhere. So what? To say it's ridiculous, no, it's not. That's what it is. So you have to figure out what you have to do in terms of a side hustle to make additional money to get out of that funk, right? If that is the level that you choose to accept, then you accept mediocrity, and then you should have that mediocre life and complain for the rest of your life. If you want to get beyond that, then do something beyond that. And Justin says, yes, there are ways to design a lifestyle that minimizes spending. Absolutely. Well, most rich people, totally embrace that idea of minimized spending while they're doing the side hustle and saving everything they got and then investing it again. What do I think about the uranium sector? I invested very heavily in it. I don't know what heavy investing is, but it's one of those sectors that goes through its own natural boom and bust cycles. Right now, it's probably past its boom cycle, and we'll be heading into a bust cycle. Ernie, when they gonna stop pumping SPY? They're not going to stop pumping SPY. It's going to keep on pumping. It's going to keep on pumping. That's just the way it is. All right, we have to talk about our sponsors, which is me. I am my sponsor, and the sponsor of this show is the Asymmetric Advisor Newsletter. We are a natural resource investors, the investment newsletter club, I guess you could call it. We have private Discord and monthly reports and daily commentary. And we're all about finding asymmetric bets. The things that we've invested in so far since the inception have returned well over 100%. And some of those investments still have a long ways to go. Very cheap to join. We have 10 spots for this month's or this week's webinar for induction. Get in there. 10 spots left. Join now. You won't be sorry. Promise you that. Okay, that was one of our sponsors. See, that's a side hustle. Cedric, that's a side hustle. Maybe what I'm doing right now is a side hustle in a way. See, I am the American hustler. See right there? The American hustler. Sometimes that has a pejorative word. What it means is that I have multiple businesses, multiple sources of income, and do what I have to do to stay on top. I live in an affluent town, an affluent area, and yeah, pay through the nose, but it's worth it because it's beautiful. That's what it takes. You want to get beyond that level of mediocrity, then you do things that are no longer mediocre. You do things a cut above. So I don't know if you heard, but I just bought a pool table. And as a matter of fact, I'm constructing the light out in my garage right now. But I'm going to be broadcasting from the pool table in the near future. And that's kind of like part of this whole thing I'm talking about. If you want nice things, then you work your ass off for them. And do what you have to do. Don't accept that just that corporate job. I'm not saying there's anything wrong with that corporate job, but you got to do more if you want more. And maybe your path is through that corporation. I don't know. But you can't just be that schlub in the cubicle, which is now going to have plexiglass partitions between you and everybody else. Maybe turn it into a bubble. That's what you want? That's what you're going to get. You want more? There are a couple of ways you can have more. But you got to figure them out. I can help you. I'll help you figure them out. I've figured them out. I've been doing it for 20 years. Answering to nobody. I answer to nobody at all, except for my customers. All right. So we've been going on for about an hour. I think that the limit is here now. Gold is down. Oil is down a little bit. The markets are way up because of positive economic reports and the type of economic reports that truly get to the core of what's happening here in America. And that is that people are getting back to work, but we have such a huge void to fill. We are still in a deflationary situation. We need to get out of that. And don't worry about the spending right now, because the spending will not induce inflation right now. It can't. The deflation, that huge sucking sound, that huge hole that we're in, is a ravenous beast. It will take a lot of spending to get us out of there. But the quickest way is to get people back to work. to haul in those global supply chains and start building that manufacturing, that production here, and creating jobs off of it. That's what we have to do, and that's what I suspect that we will do. So everybody, I hope you're having a great Wednesday. I think that everything that's happening in the market today and what happened with these economic reports is a huge positive. We still have a lot to work out and to get over with incredible headwinds with this racial strife, the insurrection by these anarchists called Antifa, the pandemic issues that we're working out, the constant lying of the media. All of these things are unbelievable headwinds. Yet still, you must find a way to get beyond it, to climb on top. You must. I'll be here tomorrow, maybe later today. I want to thank everybody for showing up. Please hit that like button. Smash the like button. Subscribe if you're not already subscribed. I've got 10 spots left on the Asymmetric Advisor for this weekend's report, webinar. Join the rest of us. Become part of the gang. We'll make some smart investments that will help you with that side hustle. And thank you very much. Time to go. Got some work to do. Take care.